Mira Business FM.
This is the morning drive. It's Mira Business FM. I'm just thinking, just ahead of welcoming our next guest, there are things about this week that have been very trying for lots of people. And obviously in the background, we're very aware of the tension. But there has been an upside this week on this program, I've noticed. And that upside is I've got to speak with Jeff Rhodes twice. So... every cloud has a silver lining, Jeff. Do you know, it's nice to see you. Of course it is. Thanks for coming back in.
Yeah, it's great. You should play Hi-Ho Silver Lining as an intro.
I know.
That would be good fun.
Do you know what happens now, though? Because so many radio stations are broadcasting kind of TV-wise, i.e. with cameras, and it's on YouTube, you get strikes because you're playing things, because of the way the rights work with music. They shout at you and tell you off that you can't play things anymore. Yeah. So we'll probably just have to sing it to a slightly different tune, and then they can't get
Apart from Silver being my favourite, of course, the singer has also got a great name, Jeff.
Yeah, this is true. Do you know, I'll tell you a story about Hi-Ho Silver Lining, because I'm a big music fan, but that song was put out kind of to tender in the 60s, because what people would do in the 60s is write songs and then, bands would pick or not, producers would produce for them. But that song was put out to in the 60s, and Jeff Beck took it, and it was a bit of a novelty record, still is, really. But there was another band called The Attack that did it first.
Oh, right.
And he got the hit with it. But The Attack were fantastic. They were kind of a punky sort of Beatles band in the mid-60s. So I really liked them. But so there's my Hi-Ho Silver Lining story.
Oh, right.
Yeah. There are more interesting things to talk about, though, than that this morning, aren't there, Jeff? Nice to see you. Look, let me just, before we go any further, congratulations are in order, I think. You are a strategic advisor to the CEO of Monetary Metals. If we had an applause sound effect, I would be hitting the button now. Tell us a little bit about that.
Well, Monetary Metals is an American company that I think it was established 11 years ago, right. And it's got a different approach to the market. It's all about gold leasing in and leasing out. They actually have a platform that enables people that have physical gold to gain a yield from that physical gold by placing the gold on the platform. And then off that platform, people who need to borrow gold or lease in gold to run their business, i.e. gold jewelers, there are many gold jewelers in obviously the Middle East in general, and Dubai specifically. So takers of gold on lease are jewelers, and placers of gold on lease are people that own physical gold, and Monetary Metals has been successfully putting those two sides of the business together. And I was lucky enough to be asked to advise the CEO of developing their business here. And so, it's a new string to my bow, Tim.
That's an interesting venture. So, is this what would this mean to somebody like me? I don't, as an owner of a little bit of gold, for example.
If you have physical gold, you can place that gold on the platform. You would sign up,
and it's literally like loaning, proving that I have a certain amount.
It's leasing. Big difference between leasing and lending.
So I'm leasing it to the platform.
Yeah, because, for example, when you take a car on lease, you don't own it.
No, for sure.
The title doesn't pass to you.
Okay.
You're simply using that car.
Right.
Now, this is where if you have physical gold, you can place it on the platform, and then a leasee will take that gold and use it in the business. But the underlying gold still belongs to you, and is being used by a client. It's transformative, honestly. And this is something I got involved with, guess what, in September 1999, and developed a gold against gold lending. It wasn't a platform, but it was required for people jewelers who needed to borrow gold. They use this gold against gold strategy. And that's been taken to a much higher level by Monetary Metals, and So I guess I was approached because, if you like, the concept was, I was one of a few people who had that concept 25, 26 years ago.
And you're one of a few people who
Still
could
alive,
put that in place.
who can remember that.
That wasn't where I was going, but there you are. So how does it work for I'm interested actually, how does it work for a jeweler? Because obviously you're selling quantities of gold, so that's gone. You no longer have that. Is it based on an inventory level? How does it work?
It is. So for example, if a jeweler needs to carry 100 kilos of inventory, okay, so he could take physical gold from the platform and turn that physical gold into jewellery. He then has an asset and a liability that's in gold. It's a gold ecosystem. Any lease fees that are paid and received are in gold. So the relationship to the US dollar is no more. It's simply gold. And one of the big problems jewelers have had in the rally over the last year is the extent of that rally, because typically facilities are denominated in US dollars. So the higher the US dollar gold price is, the less amount of gold it will give you. So you've got 64% less gold because of the movement of the gold price in dollar terms. So that creates, if you like, a margin call, so that you have to pay your financier dollars to make up to where you should be. Now that is not good, because if you're taking 64% of your money and giving it back, say, to the bank, you've got less gold to sell. And so this concept of leasing gold, it means you have gold that you've leased from the platform, you turn into, then that gold is turned into jewelry, because the lessees are jewelers. So gold against gold, you'll never have a margin call ever. So you can concentrate your liquidity, your assets in gold. It really is transformative, and makes the lending or leasing and leasing in, leasing out of gold so much simple. It's a simple idea, but it's cost effective.
Yeah, well, no, I can see that, and I'm kind of getting to grips with it. It's the idea of this kind of, you have this big bulk, this kind of golden hippopotamus that doesn't move, kind of thing, and all of a sudden it starts to move.
Yeah, no, look, absolutely.
It's more for your money kind of idea.
It is.
Isn't it?
It is It's almost going back to the old-fashioned gold standard, where you've got gold against gold.
Yeah.
So that gold against gold means that you never have to face a margin call, because the gold price is going up. It's gold against gold.
Very, very clever. It's always the simple ideas.
It is.
Yeah.
Well, as I say, we thought about this 25 years ago and actually did implement it in the jewellery sector here. I think first time was 2005, but it never really took off. But the events of the last 3 years of really giving this gold against gold structure a boost, because the I wouldn't say the evil of margin calls, but margin calls are very, very difficult for the jewellery sector to deal with. And so by taking gold on lease, you're no longer going to have what you're doing, you're putting your collateral is the jewellery that's in your store.
Yeah.
And what we did 25 years ago was create the concept of a gold store being actually a vault, effectively built. You've got a virtual vault is the gold store, because it has necessary, controls and visual controls. You've got TV. You're watching your inventory all the time. So actually, it's so simple, Tim, that it took a long time really to take off, but it has taken off. And as I say, this monetary metals have recently established in the UAE, and I'm lucky enough to have been asked to advise them on their development.
Congratulations. At least it gives me another way to describe you, at least, which is another thing I have to remember. So thanks very much for that.
Yeah.
Look, so that's the events of the last 3 years, the combination of an amount of work I'd suggest for you. Let me bring it forward to the the last kind of 6 days
Yeah.
in the gold sector. We spoke, it was on Wednesday morning, wasn't it? But what have you made of the last 6 days, but in particular the last couple of days since we spoke?
Well, I think the main takeaway is the fact that the volatility has really gone away. If you remember, I'd been talking about this, that really for me, gold was well established above 5,000.
Yeah.
That now really is a pivotal level. And I expected a trading range of 5,100 to 5,300.
Yeah.
It is following, it's behaving
exactly
well.
that.
It's exactly that.
Yeah.
And so every time it looks as though it's going below 5,100, it doesn't.
Mm-hmm.
Every time it looks as though it's going to break above 5,300, it doesn't. I think it's found a point of equilibrium, really, and where we are now. And I see more of the same. We have a big day coming up. It's not all about geopolitics.
No.
Today we see US non-farm payrolls.
That's right, yeah.
And this is an economic metric closely followed by the Fed. And whether or not the economy is growing, whether or not employment is growing or not growing, is an important factor in them determining interest rates. Okay, so we do have the factor of rising energy costs, rising oil prices because of what's going on in the Gulf, means higher, the cost of petrol at the pump, particularly in the US, is going up. That puts an upward pressure on inflation. Rising inflation, which is theoretically good for gold, is actually bad for gold because it means higher interest rates, or at least interest rates not being cut. Now, we've all been looking for the Fed to cut interest rates because Donald Trump believes 2% is the right level. The new Fed chairman shares the view, say 2% is the target, with around about 3.5 to 3 3/4 at the moment. So the markets have been looking for a sharp decline in interest rates. If we've got inflation really building again in the US because of energy inflation, that takes rate cuts off the table and is not good for gold.
Yeah. I am following you.
Yeah,
It's a convoluted way of getting there, but
you're... Tim, I've always said you have to have some kind of a convoluted mind to really understand gold. You have to be a bit weird.
You're the embodiment of convolution. Yeah, you are,
Yeah.
Absolutely. But it is so interesting at the moment because there are so many facets. And Kevin Walsh, the next Fed governor, is officially nominated now. So we're a step closer to a rate cut friendly chief who may not be able to be rate cut friendly for an amount of time. This is the other aspect of this. So we've got jobless claims data due, the employment report, non-farm payroll, information to come. What do you expect
today?
What are your thoughts?
I think the non-farm payrolls will be a damp squid. I don't really see it being either too much or too less. So I think that will be a damp squid. We've got retail sales as well. That could be interesting this time because if it's projected to be zero change, if that came in lower, that would be a little bit friendly to gold. But we're heading into the weekend, and what do we have? During a period of geopolitical problems that we have, I think you'll have insurance buying ahead of the weekend just in case it gets worse. And then that could well be liquidated on Monday. So I would expect to see a price sometime today around 5,300, currently around 5,100, just above. But I see a rally today towards 5,300 and ending in, at the top end of my $200 trading range.
Okay. It's interesting, last week, I was making notes last week. I make a lot of notes when you're here because I'm very forgetful. Your predictions for silver over the weekend, $95, 5,300 for gold, 2,750 for platinum. But it was also clear that you expected something to happen over the weekend.
Yeah.
Last weekend,
I did, yeah. And it happened.
It did.
And then it's like, oh, okay, it's happened.
Yeah.
Okay, move on.
I mean, we were all hoping for it not to happen,
We
but
were hoping
of
for it
course
not to
did.
happen, but when on Monday it stopped shy of 5,500, it got to 5,450. Once it stopped there and then turned around, for me, I would say, to typify the market at the moment, there's a distinct lack of interest. There's a distinct lack of trading volume. So we're in the middle of obviously difficult situation, and geopolitics, tensions are meant to be good for gold, but there's no real volume.
Yeah.
Look at yesterday, 125,000 contracts on the COMEX against a typical average of 300,000, and in January we had 500,000. So the trading volume has gone away, and without real trading volume, you don't get major moves, and that's one of the reasons why I think an extended period of sideways trading lies ahead, almost irrelevant of what happens in the Gulf.
I mean, you've been very consistent on this, certainly for a few weeks, if I kind of think back. Let me ask you something about silver, because that is also, gold is one side of this conversation generally, but silver is also a story. In the last week of kind of peak potential volatility, silver advanced nearly 9%, am I right? Which is significantly more than the gains we saw in gold.
It did. It ran to a high of $97.
Yeah.
And now we're around about $82. So we've got a trading range now set 80, maybe 75 to 80 on the downside.
Right.
On the upside, 95 to 100. I would have thought we're in for a period of trading within they're wide parameters. If you look at the percentage,
They are, yeah.
they're very wide.
Yeah.
But it was interesting. I noted that a measure of volatility is the margin that you are required to put down by futures markets. And I saw a headline today that the COMEX has reduced silver margin from 17% to 15%. But 15% margin to enable you to trade, typically that would have been 5%.
Yeah.
So the margin being charged by futures markets is indicative of the extreme volatility in silver, and that's really the feature of it. So looking ahead maybe to let's say March, a range of 75 on the downside and 100 on the top side, 95 on the top side, I think is fair.
Well, I was going to ask you, if you take into consideration major players, say Deutsche Bank, they've just revised their year-end targets to $100 an ounce, okay? Just let me put this forward to you. What's the specific catalyst beyond more military escalation, let's say, that would, trigger a permanent triple digit?
Interest rates.
Yeah?
Lower interest rates.
Okay.
And giving a boost to the global economy.
Right.
Because silver is an industrial precious metal. It's driven by industrial demand. There's a certain amount of monetary demand because it is a monetary metal.
Yep.
But it's really driven by industrial demand, which is driven by economic growth, which is driven by interest rates. So for me, it's very distilling clear, it down. The real driver of gold and silver, and to a certain extent platinum, but certainly gold and silver, interest rates.
Let me push you. We got a couple of minutes actually, so there's plenty of time. Is there a new Jeff Rhodes target for silver now? Is there a new Jeff Rhodes target for gold? Are you still happy with your original 150, 125 to 150? You were leaning towards 150.
Yeah, I was 125 originally, but I think 150, and I have no reason to change my view that eventually we could see a price of 6,500 this year for gold. Gold is doing very, very well.
Sure.
In a period of time where there's no real trading volume, it's still hanging in there because there's only one thing that you can be sure of every day of the year in gold. There's only one thing, So let me ask you what that one thing is, Tim.
That I can be sure of when trading in gold every day.
Every day, it happens in gold every day.
What can I be sure of? Many things, but I can't think of one thing off the top of my head.
Every
Put me out of my
day,
misery.
gold is sold by producers. Every day of the year, gold is produced and sold by producers. Whatever the price, it comes into the market. Demand is driven by many factors, but supply is very simple. It comes from gold producers who need to sell that gold every day to stay in business. And so, yeah, we're always going to have a flow of gold coming onto the market. So for me, gold is always driven by demand, not supply.
It's always a learning experience with you, Jeff Rhodes. It is. I haven't seen your report today. I guess that's coming. But I just wanted to end up with, I learned something else from you, terminology of the day in your report this week, fool's gold, which I'm aware of as a phrase and a song,
what was it?
of course. Pyrites of iron sulfide, gold-like in experience, which can delude amateur prospectors.
Exactly, yeah.
Love it.
Yeah.
I just enjoyed that. Still not as good as Contango, which is my absolute favourite.
It's Contango. It's not
Genuinely.
a dancer, by the way.
No, it should be. It may become one. I'm not sure. Jeff
Do the
Rhodes.
Contango.
Oh, tell me. We'll do some Contangoing next week. Strategic advisor to the CEO of Monetary Metals, a gold leasing platform. It's fair to say, isn't it? Always good to see you, Jeff. Thank you for coming in.
Thank you.
Stay safe. Appreciate it. It's Mirror Business FM.